Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share your opinion. Together with us to answer multiple choice questions about international accounting. Now, let's get started. Information on the beginning and ending balances and the increase and decrease in equity during the period is shown in the financial statements, A. Balance sheet. B. Income statement. C. Cash flow statement. D. Equity statement. D. Equity statement. Accounting records a production equipment at market price at the time of preparing financial statements, violates which of the following principles? A. Revenue principle. B. Prudence principle. C. Materiality principle. D. Historical cost principle. D. Historical cost principle. How many basic elements are required for each accounting account? A. There are 2 elements. B. Only 1 element. C. There are 4 elements. D. There are 3 elements. D. There are 3 elements. Which of the following is a characteristic of the American accounting system? A. There is no account reflecting revenue. B. It is not mandatory to use a common name and number for all businesses. C. There is no account to determine business results. D. It only includes asset accounts and capital accounts. D. It is not mandatory to use a common name and number for all businesses. On January 2, 2025, the company paid rent for the whole year of $12,000. Assuming the accounting and reporting period is quarterly. At the end of each quarter, the accountant will make adjusting entries. A debit cash account $3,000 per credit accounts payable to sellers account $3,000. B. Debit accounts payable to sellers account $3,000 per credit cash account $3,000. C. Debit prepaid rent account $3,000 per credit cash account $3,000. D. Debit rental expense account $3,000 per credit prepaid rent account $3,000. Debit rental expense account $3,000 per credit prepaid rent account $3,000. On January 2, 2025, the company paid rent for the entire year of $12,000. The accountant would record a debit cash $12,000 per credit accounts payable $12,000. B. Debit accounts payable $12,000 per credit cash $12,000. C. Debit prepaid rent $12,000 per credit cash $12,000. D. Debit rent expense $12,000 per credit cash $12,000. C. Debit prepaid rent $12,000 per credit cash $12,000. At the beginning of the fiscal year, the company paid $24,000 for office rent for the entire year. The company accounts and reports monthly, and the monthly expenses will be recorded as A. $5,000, B. $4,000, C. $3,000, D. $2,000. B. $2,000. The balance of the accumulated depreciation account reflects A. The original cost of existing fixed assets. B. The remaining value of fixed assets. C. The depreciation value of fixed assets during the period. D. The accumulated depreciation value of fixed assets. D. The accumulated depreciation value of fixed assets. Depreciation of fixed assets will affect A. Increase the depreciation value and reduce the remaining value. B. Decrease the original price of fixed assets. C. Decrease the depreciation value of fixed assets. D. Increase the depreciation value and do not affect the remaining value of fixed assets. A. Increase the depreciation value and reduce the remaining value. Dragon Company purchases a production line worth $10,000. The $1,000 transportation cost incurred will be recorded by the accountant. A. Debit transportation costs. B. Debit production costs. C. Debit fixed assets. D. Debit purchases. C. Debit fixed assets. Thank you for watching our channel. See you again in the next video.